The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Andy Duncan, keeping you up to date with expert opinion on precious metals and the markets.
Welcome to this very special Gold Money Podcast, where I'm not just speaking to one guest today, but I'm speaking to two. First of all, I'm speaking to John Matonis of the Bitcoin Foundation. Hello, John.
Hi, Andy. Glad to be here.
And I'm speaking to Doug Casey of Casey Research. Hello, Doug.
Pleasure, Andy.
Fantastic. Now, a couple of weeks ago, I spoke to John Matonis of the Bitcoin Foundation. I put a few conspiracy theories towards him about Bitcoin. And during that process, I raised what I called the Doug Casey objection. And that was about the idea of multiple Bitcoin currencies and how they could supersede each other. And in that conversation, John said he'd like to speak to Doug. So Doug has graciously agreed to speak to John, and John has graciously agreed to speak to Doug about this. I'm going to try to stay as much out of the way as possible. And I'm going to put Doug in a gold corner, and I'm going to put John in a Bitcoin corner, and hopefully they can have a gentlemanly debate about the two major free market kind of currency options which seem to be arising, which is Bitcoin and gold. Okay, coming to you first, Doug. You said recently in a conversation with Casey, with Louis James, that people should save gold to protect themselves from the oncoming Greater Depression. In that piece, you never mentioned Bitcoin at all. Can you say why you never mentioned Bitcoin?
Well, listen, I'm all for Bitcoin, and I think it serves a very useful purpose at the moment. I just think it has some serious problems and is unlikely to stand the test of time. I think that gold and silver have proven useful as monies throughout thousands of years of history. That's going to continue for the indefinite future. I mean, money is a medium of exchange, and Bitcoin certainly serves that purpose, and it's a store of value. I'm not convinced that Bitcoin is a store of value. So, I'm just unconvinced about it. That's all.
Yeah, let me respond to that. Definitely. First of all, I'm honored to be on a podcast with Doug Casey, so I will do my best to keep up. I want to say at the outset, though, I'm not against gold or silver. I come from that background, so I view Bitcoin as complementary to a precious metals portfolio, and that's something I want to get into as well. But if you take the starting point of civilization is not really going to be regressing back to an era of no electricity and no internet connectivity. We may have that in some pockets, in some regions, and you may see some turmoil in states like Syria and Iran and Egypt where it's turned off temporarily or it's censored. But the internet, and you can pretty much count on civilization having electricity. Without those things, we have way bigger problems than just how you're accessing your Bitcoin. So I wanted to take the electricity internet argument kind of off the table and set it aside. And with Doug here, just really try to focus in on the objection that I see coming from some of the metals people, not all the metals people, but the objection around intrinsic value and store of value. I agree that if you look at it as a store of value now, Bitcoin seems highly, highly volatile. But I would really like to hear Doug's answer to two specific things, though. And the first one is, as a precious metal investor, how do you see it playing out with the ongoing market manipulation? That seems to be something that Bitcoin doesn't suffer from because the Bitcoin market seems to go up the way the precious metals should be going up. And, if you're like me, where you speak of this great wealth transfer that's going to be occurring and we're all going to be coming out the other side. The winners will be the gold and silver holders in the great wealth transfer. It seems to me that Bitcoin has a role to play in that as well, in the great wealth transfer, as well as ending the welfare state.
Well, one at a time, I guess. Governments, of course, by their nature, try to control everything. It's certainly something they want to do. And of course, there's been this meme floating around for some years that the government or large banks or whoever, some kind of powers that be, are artificially suppressing the prices of gold and silver. And this has never made any sense to me because, while it's true that governments have an interest in seeing the price of the precious metals lower, just as they have an interest in seeing the price of all commodities lower, wheat, copper, whatever, everything except for real estate, which they want higher. They've been manifestly unsuccessful in doing this. That's been their objective. We've had the biggest bull market in world history in the metals since 2001. Doesn't seem to me like anybody's been suppressing the prices of these things. So I don't buy the whole argument for that and many other reasons. What was the second thing, John?
The ability of Bitcoin to assist in a great wealth transfer.
No, I'm all for Bitcoin. Anything, to start with, the free market can and does decide whatever it wants to use as a currency, whether that's US dollars or Zimbabwe dollars or gold or Bitcoin. Take your choice. So I'm glad Bitcoin's out there. It subverts these fiat currencies of the government, and it's a good thing for that reason. I just am not sure it's going to last because remember, there's another thing called, Litecoin, and there could be a dozen, there could be 100 of these things, and I think that's a serious problem, among others.
I agree with you on the points about the Bitcoin looks good from the non-statist point of view. It's not government controlled money. I look at it as sucking in all of this wealth from national political currencies that are basically controlled by a government illusion. And if money is an illusion, why shouldn't individuals be free to choose their own illusion rather than a government mandated illusion? I don't know if I agree with you on the lack of exchange, banker, government collusion on naked short selling, but that's probably a podcast for another time. I want to try to convince you on some certain points that are more personal to me on Bitcoin versus gold and where Bitcoin comes out in the area of being superior. So two of the things that you might want to look at are Bitcoin has perfect fungibility. Every single Bitcoin is just like any other Bitcoin. It might be tainted because it came from somewhere else, but it's not like gold bars where you have different variations and assaying and tungsten cores and everything like that. So the perfect fungibility is something that will become more important, I think, as Bitcoin moves forward. And also, it's the first time we've ever had the ability to do optional backups of things. I talk about brain wallets and storage beyond confiscation. You can make optional backups of your money so that if your hard drive crashes, you have it on a USB stick. You have secret sharing with your wife on safe deposit boxes, perhaps. You're not left in a situation where everything can be gone and you don't have an optional backup. Which leads me also to it's not subject to confiscation, which I think is a major weakness of the metals.
Okay, no, I think those are good points. I like to get back to the basics. I'm a bit of a classicist at heart, and in the 4th century BC, Aristotle discussed money, and of course, the science of economics, science such as it is, wasn't very developed back then, but he made some very astute observations about what constituted good money. It has to be durable, and I guess Bitcoins are durable. The only objection there would be if the internet or electricity goes down, and I agree with you on those things. It has to be divisible, and of course, Bitcoins are totally divisible, absolutely better than gold, perhaps. Well, perhaps not, because you can use gold in the form of gold money. That's just as divisible. Durable, divisible, convenient. Well, Bitcoin's convenient as long as you have an iPhone with you, I guess. Consistent. It's totally consistent. One is just like the other. The problem with Bitcoins that I have using Aristotle's 5-point definition of a good money is that Bitcoins don't have value in themselves. And that's the big thing with gold. If somebody gives you a Federal Reserve note, it only has value if somebody else accepts it. But gold is one of the 92 naturally occurring elements. So it does have value in itself. You can't get stuck with it for that reason, the way you can get stuck with a piece of paper currency. Or you might get stuck with a Bitcoin because it's not good for absolutely anything except for exchanging, which is all Federal Reserve Note is good for. That's my big objection to it, really.
Okay, so if you're focusing back on the intrinsic value, and that is the way that I first entered the Bitcoin debate. When I first became involved after exchanging a few emails with Satoshi Nakamoto, I was immediately starting to think, well, how could this be tied into something like eGold? And that was my mentality. And everyone knows, famous Doug Jackson from eGold. That lasted for about 30 to 60 days for me until I realized the inherent beauty is not trying to make Bitcoin like gold. It's recognizing the fact that we're, in effect, leaping to a new era. We're not depending on physical and chemical properties. We're depending on digital and mathematical properties. So it's similar to the switch in eras from the agricultural era revolution to the industrial revolution to the information age. And we're not going to know it until we're past it and until we're through it.
But John, the point that I'm making is, I don't disagree with you on any of that. And this is why I'm a fan of gold money, because it's an advanced way to hold gold, if you would. The problem is that Bitcoins are only a medium of exchange. They don't have any use in themselves because they're strictly digital. And that's the problem. And that's why it's such a problem that there could be 1,000 other Bitcoin lookalikes developed and out there competing. And that's a kind of a subtle form of inflation. It's inflation of electronic currencies in general. Sure, the number of Bitcoins is constrained, but not the number of Bitcoin lookalikes, which are worth just as much as they are.
Can I just come in here and ask John a question? The growth of human inventions, it tends to follow one of two patterns. We have the thing that you've just alluded to there. We've got the kind of steam engine, wheel, flint knife, fire, computer model, where something is invented and then it explodes and then it never ever goes back again. And then there's the other kind of invention, which is usually a kind of paper money fueled bubble, which results in a kind of malinvestment. Now, some might say that Bitcoin is a paper money fueled bubble because of all the things we've seen being going on in Cyprus and the things with fiat money around the world. People are moving into Bitcoin. But as soon as the fiat money experiment fails from 1971 onwards and we return to gold and silver, perhaps, do you think Bitcoin maybe fail at that point because people will then have a money that they like, which is gold and silver?
Just as I mentioned before, that I think Bitcoin has a complementary role to gold and silver. If the scenario that you described plays out, which I tend to agree with, we will see a migration to hard assets such as the metals. Simultaneously, I think we'll see a migration to digital assets. And I disagree with Doug that Bitcoin doesn't have the properties that give it value inherently, because one Bitcoin by itself sitting in a room may not have a value, just the way that a single fax machine in the world doesn't have value to anyone. But if you look at the value as the overall payments network and payments system, which gives you the ability for user-defined anonymity and user-defined untraceability in your payments without going through a third party, without paying attention to border controls, that kind of a situation in its entirety gives it value as a network, not as an individual coin. So I look at the intrinsic value argument that way. Now, with respect to Litecoin and Freecoin and all the other variations that they have, they're going to be subject to the network effect. So the network effect is the first mover advantage that Bitcoin has out of the gate, and it funnels all of the majority of the network processing power into securing the Bitcoin blockchain. So the other ones that you describe are, secondary variants. They don't contribute to overall cryptocurrency inflation any more than silver, platinum, and palladium would contribute to gold inflation. People who are promoting Litecoin promote it as silver to Bitcoin's gold. And I see that analogy. I happen to believe that Litecoin has some issues with their own blockchain security because they don't have the hashing power that the primary original Bitcoin has. So if they can overcome those things and grow to a point where they won't be compromised, then they will be viable alternatives. But they will operate in a gold, silver, platinum, palladium kind of a spectrum.
Doug, do you have a response to that?
Well, listen, one of the things that I agree with Chairman Mao about was when he said let 1,000 flowers bloom. And I'm all for it. But I've got to get back to this basic issue that you can't use a Bitcoin for absolutely anything except for trading with people. This is very valuable. And I'm very happy Bitcoin's around, and that my friend Jeff Berwick is setting up like an ATM machine in first in Cyprus, best place to do it at the moment, for Bitcoins. And it allows people to get around the SWIFT system and get around all these government rules. Listen, it's wonderful, but I don't think it's going to last simply because it's not fungible. There's nothing there in the end. So it'll last as long as it's needed, but it's just an electronic dot.
Well, they're perfectly fungible with each other, so they have that fungibility. But until we get to a point in a day and age where you can molecularly transport gold through the internet, you're going to have to rely on what's known as digital bearer instruments. And digital bearer instruments are things that we saw with DigiCash and David Chaum in the 1990s, evolving towards what we see now with Bitcoin. And BitGold was a precursor to Bitcoin from Nick Szabo. So those are digital bearer instruments. When I have it, you no longer have it. And gold operates on the bearer instrument principle as well. So until you can do that with gold, you have to rely on others. And it doesn't have the value by itself, like I said, but the overall network is the value. So the jump in illusion that you have to make is, first of all, I agree with the people who say that if you took the monetary value away from gold, it would probably be worth only 5% of what it's worth today, because its electronics and jewelry usage is not what's maintaining the valuation in silver or in gold or silver. So strip away the monetary value of gold, you're left with the non-monetary intrinsic value of gold. The monetary value portion of gold is in people's minds, and that is what is applying value to Bitcoin as well. You mentioned Chairman Mao. I mentioned the stone money of the island of Yap, where they had recorded, it was a giant public ledger that they left in the village because it was way too heavy to move, and everyone agreed that that's what the asset allocation was. And it worked well in that tribal situation, but now we've advanced to the age of electronics where we can have a cloud-based public ledger. What I'm trying to say here is that what you think of as intrinsic value of gold is really only 5% of gold's value.
Right. No, that's an interesting point, because its main value is money. There's no question about that. A couple other things I'd just like to ask you about while I've got you on the phone, though, is one of the objections that a lot of people bring up with gold at the moment is that the government can confiscate it all from everybody. And I'm just wondering, do you think there's a danger that as the government focuses more on Bitcoin, that they're going to find, with their massive computing power and everything else they have, a way to destroy it from that point of view?
Well, I think Bitcoin is a reaction to what we saw with e-gold. I don't think that the creator of Bitcoin was unaware of what happened to e-gold. And any kind of similar system would be subject to that centralization like DigiCash was, and centralization of e-gold. So centralization is not the answer, because for what we've seen historically, any enemies are able to converge on it and eliminate it. Therefore, Bitcoin gains its resiliency from the fact that it's a distributed network, a distributed computing system. It happens to be right now the largest distributed computing project in the world in terms of hash power and computational power. It passed the largest project before Bitcoin was the search for extraterrestrial intelligence, where everybody was donating their dormant computer cycles in a radio astronomy effort to pick up alien signals. Well, that was the largest. Bitcoin has surpassed it by a large margin, which gives me a lot of hope for the future. Now, to just answer your question about the government regulation, I do believe that the exchanges are going to be the weak points and the points of attack, because that's where it interfaces with the national political fiat currencies. But I don't see it as overall as a network being subject to any kind of a takedown, because if they were able to if the government authorities were able to have that kind of a power on a distributed system, believe me, they wouldn't be worrying about all these small-time copyright infringers. They would be going after the massive P2P file sharing networks that are out there now.
I know that as a speculation, Bitcoin has been fantastic. It's gone from, what, a quarter to over $200. I don't know what it is at this moment. But, John, you watch the thing. I have no idea what a Bitcoin should, quote-unquote, be worth. You have any thoughts on that?
I don't think anybody does. I think it's a binary thing. I think it's either worth 100,000 or it's worth zero. And we're going to find a market equilibrium in between that. I don't think that anyone knows the answer to that until it's actually becomes useful in global trade.
We've just seen last night, though, we saw a distributed denial of service attack on the Mt. Gox server.
Yes.
That took Bitcoin down from, I think, $265 down to $100. This kind of volatility, it frightens a lot of people. I mean, there might be 1% of the people in the world who know how to get hold of a Bitcoin and so on. Do you think that Bitcoin is not really going to be accepted until this massive volatility can settle itself down?
Well, the ironic thing about that particular exchange attack was that, yes, it did have an impact on the price, but the other thing that has the impact on the price is the overall liquidity of the market and the number of exchanges. So Gox is about 60 to 70% of overall trading volume worldwide now, and that's down from 90%. So we're heading in the right direction in terms of distributing that trading volume. But the other thing I want to point out is that Bitcoin is only 4 years old. It's a bootstrap currency from nowhere. So these trading systems are not coming out of a New York Stock Exchange division or a bank division. They're being built from the ground up. And the guys operating these things have to contend with massive compliance around regulation for KYC, know your customer, and the anti-money laundering laws in terms of identity documentation. At one point, their queue to get in as a trader was about 16 to 17,000 people long last week. And that's not a result of anything around an electronic currency. It's a result of the archaic legacy banking system on how you move your political currencies into an exchange like Gox. And then you also have to fax identity documentation. I mean, that's old world stuff.
Now, there's one question I actually wanted to ask Doug. It's about gold and its classic feature that, although it's usually hard to refine, given current levels of kind of energy production and technology, there is actually an almost unlimited amount of gold if you look at seawater and the Earth's mantle and the asteroid belt. Now, if we move towards a singularity, where there's nanobots which are taking gold atoms out of seawater and so on, we'll have an almost unlimited amount of gold. Bitcoin, on the other hand, has this kind of hard limit of 21 million units. Do you think that once we go through the singularity and we can have infinite amount of gold because we'll have infinite energy and infinite nanobots playing with seawater, that Bitcoin will actually have an advantage over gold because of this hard limit?
That's a very good point, Andy, because I've always said for years that with the development of fusion energy and the nanotechnology and so many things like that, getting the seed plants to concentrate the gold. I mean, it's the price of all commodities has been in a bear market for about 4,000 or 5,000 years as people have gotten wealthier. So I don't know what we're going to use as money in the future. Could be that gold will join the ranks of the departed. And maybe we'll always need a medium of exchange, I suppose. No, I mean, listen, I'm open on that. That's an argument for Bitcoin or perhaps version 2.0 or version 3.0 becoming the money in the future. I mean, it's possible.
So Doug, do you think we'll see $2,000 Bitcoin first or $2,000 gold first?
Oh, I have little doubt that regardless of what the far future may bring, that in the near future, gold is going to be where it's at. I think we're going to see $2,000 or $3,000 gold in terms of today's dollars. I don't know what it'll be in terms of tomorrow's dollars. I mean,
so we'll see that in gold before we see it in Bitcoin pricing.
Well, it seems that way to me.
What would you say is a reasonable percentage? Because I know you're an advisor as well. And what would you say is a reasonable percentage for someone's portfolio to be in Bitcoin?
Well, I don't own any myself, but that's not actually true. A Belgian friend of mine gave me a physical Bitcoin. I guess you've seen those.
Yeah, I have some of those. I like those.
Yeah, so I actually have one of those. He gave it to me when it was worth about $14. So
it's like holding a maple leaf, but not as heavy.
Yeah, exactly. I don't feel qualified to. It seems to me that right now Bitcoin's in a bubble. Any asset that goes up so far, so fast, that I don't really understand. I mean, this is why Warren Buffett buys railroads. It's easy to understand a choo-choo train and how you use it.
Right.
So I just recuse myself from where the Bitcoin's going in terms of dollar value. But I do feel pretty confident gold is going higher at this point.
John, can I just ask you something? Bitcoin's kind of full nature hasn't really been revealed to us fully yet. And no one's really sure whether it's a money, a commodity, a digital commodity, a trading vehicle, or it's a speculative vehicle. Now, after the Cyprus event, people have been piling into Bitcoin, perhaps. And now they're maybe hoarding and speculating with Bitcoin rather than using it as a kind of money. If people continue to kind of hoard Bitcoin and speculate on it, do you think that, let's say if we did have a fully Bitcoin currency kind of market, that this could cause hyper-deflationary events in the future?
First of all, I don't think that deflation is necessarily a bad thing, the way other economists seem to think it's a negative thing. I think increasing a citizen's purchasing power is a good thing. Now, in terms of the Bitcoin being taken off the market as a long-term investment, that will take a certain amount of supply off the market, just as it would with gold being used as a currency. So I don't see the distinction in that argument any more against a Bitcoin standard than there would be for a gold standard. Gold would have tend towards the same deflationary properties as a currency, and Bitcoin can still handle that because the transaction properties that it has won't be able to be solved by anything else. So there will be times when you can't just say, oh, I'll pay for that another way. And when we start seeing extreme capital controls, Bitcoin may be the only outlet for that. There was just a story of an Italian couple that was stopped at the border, and they had $50 million worth of gold bars hidden under the passenger seat in the floorboard of their car. So that seems like a very old-fashioned way to move their wealth across the border.
I just wanted to ask Doug this. One of the other problems with Bitcoin is that people are slightly untrustworthy about it because we don't quite know where it came from. We have this Satoshi Nakamoto, but nobody knows who they are. Do you think people would trust Bitcoin a bit more if Satoshi Nakamoto came forward and announced themselves to the world?
Well, this is one of the reasons that I like gold, is that notwithstanding the fact that it has the same specific gravity as tungsten, and that leads to potential problems with bars and so forth. When I've got it in my hand, I can recognize it pretty easily, and I don't have to worry about its pedigree. So I don't know. Look, it seems to me that Bitcoin has actually been, and I wish I'd diagnosed this and seen it, but I missed the boat, an ideal speculative vehicle, because a speculation is, I define that word as a speculation is something that capitalizes on politically caused distortions in the marketplace. If we lived in a complete free market society, there'd be very few speculations. But the more politicized an economy becomes, the more speculations there are, figuring out where the next bubble is going to be, when the next bubble is going to blow up, and so forth. And with building exchange controls and currency wars and all kinds of crazy things like that these governments are causing, I think this is the reason for Bitcoin's popularity at the moment. And of course, those things are going to get worse, not get better. So I'm not going to bet against Bitcoin right now, despite the fact I actually think it's in a bubble. So I guess that kind of sums up. And philosophically, I'm all for it, notwithstanding the objections that I have.
Well, it's not too late either, Doug. I mean, I don't think you missed anything. We're still in the very, very early stages of the early adopters. So there's no worry on that.
John, from your mouth to God's ears, because I do own a Bitcoin.
Let's hope it goes to $2 million then. Can I just put the same question to John then? Do you think people would trust Bitcoin a tiny bit more if Satoshi Nakamoto, sort of like Spartacus, announced themselves to the world?
I don't think that really matters at all. It's 100% open source code, so it doesn't really matter who he is or even what his objectives were. The fact is that it's out there and it's peer reviewed by leading cryptographers, and it continues to improve. In terms of the price, I kind of look at it the way James Turk looks at it when he says he's sitting in a boat looking at the shore. I mean, it's actually the extreme volatility in the dollar and the euro that we're seeing against Bitcoin, and Bitcoin will remain the constant. It's just that it's so new right now. No one is certain where to put that equilibrium. And when it comes to political currencies, I mean, Doug and I will both agree on this, that I don't want my money to say in God we trust. I would rather that it says in cryptography we trust.
Do you have any further questions for Doug while he's on the line?
I think I asked them all, and I look forward to the future.
And Doug, do you have any further questions for John at all?
No, listen, it's been pleasant and enjoyable and what's the word I'm looking for? Elucidating, speaking to you. So no, and you're right. It is early days for Bitcoin, so it'll be fascinating to see how these things evolve.
Early days, because 99% of the people don't know how to buy it yet.
And Doug, are you going to be getting hold of more than one Bitcoin now?
Oh, my problem, to be honest with you, is I tend to use a computer as a blunt instrument. I mean, I'm not sure that I may be falling behind because my idea of a password is my dog's name. It's not very secure. So I fear that I lack the sophistication necessary to do it properly.
Okay, it's been great speaking to you today on Bitcoin. So thank you very much, Doug.
Thanks, both of you guys.
And thank you very much, John.
Thanks a lot. It was a pleasure.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our Gold Research section.